Today's number is 200,000. Many people are speculating that Bitcoin is about to go absolutely ballistic, but is that really the case? As positive gamma and options markets from Wall Street start to take over in the crypto sphere, it's clear that we're seeing several huge breakouts in the face of adversity. With government shutdowns, negative news, and what we call the wall of worry, could it be just the beginning for certain sectors? And what's happening on the most bought insider area that just started to occur? We've got the data that you need to know. Let's break it down right now together, guys. Stocks, commodities, and cryptos. There's a lot to get into. See you in a second. Well, welcome back everyone to The Daily Show. My name's Thomas Atkinson, and in today's video, we have the key trends, which will surprise you, what's going on with the macro, and some data that cannot be missed. With healthcare being the most insider traded area, is it about to actually see an explosive move? Well, it looks like thrusts are underway. And as you guys know, when we see a good thrust, we always want to be paying attention to what tends to happen over the next coming months. Could we be entering in what we call late cycle of this bull market? Well, one thing's for sure, we may have just seen the search term AI bubble hit its peak, never to be seen again for a little while. Why is this? Well, during August, you can see how many people were searching the term AI bubble. Generally, when this happens, you're kind of aware that, as we say on this market, it usually isn't over yet. Remember, everybody has to be all in before a true bubble to actually explode. And this search term itself usually happens at kind of the mid to late cycle stage, where you're getting into that final run on a market that just becomes super euphoric. But it wasn't just those search terms. Crypto bubble, AI boom, and crypto boom all absolutely accelerated and have started to drop off once again. And this could mark an incredibly important point in history of what we're seeing in this current market run. Does it mean it's over yet? Probably not, and we'll explain that later on in today's video. But let's take a look at the big worrying news right now and how, of course, we're bucking the trend against the wall of worry. Now, you guys know the daily 20 moving average is one of the most important reads on the S&P 500, but one of the other important reads is sometimes reading in between the lines. Now, we do know that, of course, when shutdowns happen, it creates a ton of news, everyone panics, and we have to go back to the data to really understand what's happening. But this has actually happened now all the way back into the 1970s, and you'll notice that over time, it's become less and less of a thing affecting the markets. In fact, since 2013, you can see here that it's been positive every one of those times. And the last period, which actually, remember, was the longest period of shutdown, 34 days here, according to Carson's research, shows that it was actually a 10.3% return over that time. And you might say, how is any of this possible? Well, it's all about not having that too much bias based on, of course, looking at the charts. If the charts and flows are moving up, if the money markets are moving towards positive gamma, it's very difficult to go against them. Speaking of which, there is something very worrying happening at the same time as we're seeing extremely bullish people. And that is that there are now more PE funds than McDonald's. Now, you might say, why is that worrying, Tom? Doesn't that mean a lot of spend's going in? Yeah. But this actually also happened with the internet boom. And you may not be aware of this, and I'm doing a bit of a piece on this for the show coming up and my advanced class, which links are in the description down below if you're interested in. But this actually is a reoccurring phenomenon with new technology. We actually introduced more hardware and infrastructure for the internet that was never used, some of it, post the dot-com boom. So this is another sign of sometimes people getting a little bit ahead of themselves. Private market giants hope the next surge of growth will separate the best from the rest in the industry saturated by too many firms. Remember, the latest MIT study said that 95% of AI businesses were likely to fail. So there is going to be, of course, a rising tide of the good ones, and the bad ones are going to possibly fail. Private equity firms are raising and deploying billions of dollars into artificial intelligence, particularly, and this is the key word, data centers, with hopes of emerging asset classes will deliver, of course, more growth. On top of that, investors are cautious about the risks of pouring cash into AI infrastructure. They don't seem to be because they're putting it in, but see opportunities to structure tailor-made financing options and lock in lucrative returns. So it's kind of like .com 2.0 in some cases. Everyone's on board, everyone's pushing towards it, and they know that the one that gets to the top is going to be the winner. The problem is there's going to be so many failures along the way, and this is the standard cycle of any new technology coming through. Is AI the future? My opinion is yes. Most of you guys probably yes. Put it down below if you think AI is the future. But with any great AI or any great technology boom, there always comes a growing pain and usually a bottleneck. And we could be getting close to that bottleneck based on data inputs more than you guys think. I think maybe over the next year or so. So let's talk about why this matters. Well, you've probably heard of the Buffett indicator before. And while this is not the greatest tool like it once was, it certainly does show us that in some metrics, the markets are, of course, quite expensive. Now, I've talked to you guys about, and we already know this, that the Buffett indicator is all about realistically looking at it as a worldwide read right now, because, of course,